Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, March 13th, 5 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. State of the market in a moderate correction. We closed actually, we hit 10% off the highs 2 days ago, but closed more than 10% off the highs today in the S&P 500. And from a media standpoint, they call that technical correction area. Although if you've been following us, we went from mild correction when we hit -4% off the high, then moderate correction at -8% off the high. But all the while, that was much better than what was happening to growth names and the small and mid cap indexes. Check the trend gauge over here, market leadership, obviously, with the red arrow. Our short and medium term trend indicators, we use the 21-day moving average for short term, 50-day moving average for medium term. Those are both red, meaning all six of the indexes that we track are below those levels. And tomorrow we will go to red on long term unless the S&P 500 or the NASDAQ 100 miraculously rally back above the 200-day moving average. So what happened today? Indexes making new correction lows, just proving oversold can get more oversold. There's emotion in the market. There's uncertainty with tariffs and economic policies. The market hates uncertainty. What we're seeing, we haven't seen a collapse in projected earnings for the S&P 500 yet. But what we're really seeing is a multiple compression. The S&P 500 was trading between 22 and 23 times forward earnings. That's an ideal scenario. Obviously, it's less than ideal now with the uncertainty. So I believe we're down to the low 20s on forward PE. Here are the numbers on the day 21-21. Obviously, still there is no 21 over 21 because there's no leadership. We hit stocks each one of these videos, but there's nothing we're really dying to get into. The big eight, this is our 8 growth ETF composite, and we created this in first quarter, second quarter 2021 to help us get out quicker, and it certainly has done its job identifying a quick change in trend in the growth type names that we track. All eight of them, sorry, that's the RG8, all eight of them down. The big eight is the Magnificent Seven plus Netflix, and that was down an average of 2.6% today. All eight of them lower, but a little bit of relative strength on Nvidia as it was only down 0.14%. There's a meeting coming up next week. They're hosting an investor day, so may be tied to that. The RG8, this is what I'm talking about, our 8 growth ETF composite down an average of 2.3%, all eight of them lower. All eight of them actually they didn't make new correction lows, but the indexes did. S&P 500 down 1.4%, equal weight down about 1%. We'll take a look at the rest of the indexes when we go to the charts. Global 60/40 down 0.6%. That is 60% ACWI. That's the all country world index, includes the S&P or the US stocks make up about 60% of that. Foreign stocks make up about 40% of it. And then the 40% is world bonds, which is BNDW. Somebody asked what the tickers were for that. So we'll give them to everybody. Our flagship GROTECTION portfolio, taking advantage of the run in gold and silver and our allocations to that up slightly on the day. Little bit of a change in the appearance of our startup screen today, and that's because I want to stress the importance of avoiding these severe bear markets. That's what we do at Revere. That's what our business has been built on. It's what we preach. You cannot allow devastating hits to your portfolio, especially if you're approaching retirement. And here are the last 13 bear markets. The most recent one was in 2022. And look at the numbers that it takes you to just get back to even. If you sit like a deer in the headlights and absorb these drawdowns in the S&P 500. Now, granted, some people will be worse because they have a more aggressive portfolio. Some will be more diversified and it won't be as bad, especially if you have bonds. But bonds did no help in 2022. The long bond got devastated. But these are the numbers we present them because this is what we do at Revere. If you've got a deer in the headlights advisor, we had a client call us today to try to get some information for a friend of theirs because their friend called up their advisor and the advisor said, "We're in this for the long term. We're not selling anything." I guess he thinks that client is an oak tree. And will live for 200 years. I don't know, but to us, it's either willful ignorance or unconscious incompetence that anybody that does not take protection to their portfolio for their clients, you know how we feel about that. Now's the time to get your assets over to Revere before you have to dig out of one of these holes. So let's get to the charts. We'll start off with the NASDAQ 100 here, making new correction lows. Just a very strong downtrend, riding this 8-day exponential moving average. We love to ride the 8 higher in uptrends. Put it on in a downtrend, you'll see the exact same thing. It's been capping any rallies for the last 3 weeks. On to the NASDAQ one, or sorry, the S&P 500, same situation with the declining 8 EMA, new lows bounced at the 5,500 level today. Yes, we're oversold, but we've been oversold. How about the equal weight S&P? Down less today, but still making new lows. And same thing with the 8-day exponential moving average riding it lower. Dow Jones Industrial Average held up the longest, still showed relative strength into this week. Earlier this week, not so much relative strength, but also below the 200-day moving average. Also note that the slope of the line on the 200-day moving average is flattening out. If that rolls over and we bounce into that and fail, that is optimal short setup time. And we'll be pivoting from looking for the needles in a haystack because we're not down that badly on the S&P 500 to what can we short on weak bounces until we, and we'll do that until we get at a minimum above the 8-day exponential moving average from a downtrend perspective. On to mid caps. New lows again, same thing, riding the 8 lower, down 1.61% on the day, and the Russell 2000. New lows down 1.6%, same thing with the 8-day exponential moving average. So those are the 6 major indexes that we track. Let's move on to the VIX. VIX had been pulling back the last 2 days, little bit of a move higher today. 25 doesn't show extreme fear in any way, shape, or form. US dollar, a little bit of a pop, but this has been in a downtrend. This normally helps stocks. It's not helping them as we're in a downtrend. So the correlation between the dollar and stocks and with precious metals is not always absolute. Speaking of precious metals, breakout for gold today over that 272 level, up 1.8%. We have 5% of our portfolio in this, at least 5%. Some have more. Silver breakout from a beautiful cup and handle, up 1.72%. We've got 5% of our portfolio in this. Let's go to Bitcoin, down 3.5% today, holding on to the 200-day moving average, but that's about the only good thing you can say about it. Let's go to gold stocks, also breaking out of a cup and handle today, up 3.13% is the GDX. Flipping over to bonds, broad bond index, gap down lower, finished at the top of the range, meaning yields initially gapped higher and then fell. You can also see that on TLT, both up on the day, meaning yields dropped. Here's the 30-year down, and TNX, the 10-year yield also lower, ran into the declining 21-day moving average and faded. All right, so though that's our interasset correlation charts, let's go to the tail of the tape. Want to point out a couple of indicators here that are contrarian bullish. The percent of stocks below the 5 days, multiple closes below the 20 level now. This ordinarily is a spot for a bounce. But again, we've been saying that for a while, and that's why these are secondary indicators. The VIX I forgot to fill this in. The VIX is at 24.66, and that was up 1.8%. Fear and greed dropped to a 15. And new readings came out on the AAII. No change in bulls, very low at 19%. Bears ticked up 2 points to 59. This 3 week high number of bears is record breaking, according or going back to, I believe, the financial crisis. And we're nowhere near the devastation of the financial crisis. So I guess investors, we have been talking in-house, and we think there's probably some politics involved in this. If you're a Trump hater, you probably think that's going to kill the stock market too. That may be why that's so low. NAAIM, on the other hand, still reasonably moderate at 68.8. That was down 6 points as well. When this gets over 100, it's been a pretty clear sell signal, but there's a long way down to go with investment managers. PPI was in line before the open, no real impact on what the market was doing. Next Wednesday, we've got the FOMC, 99% chance of no cut. Keys coming into today, we continue to watch the S&P and the NASDAQ against the 200-day moving average. Obviously, they made lower lows. That S&P percent against the 5-day oversold, contrarian, bullish, and PPI really no reaction. Day count, 3 of the last 4 down, 10 of the last 15 down, 15 days below the 8-day moving average, 15 days below the 21-day moving average. We're just trend followers here, folks. We've got our rules, they're time tested, and for no opinions injected here at Revere. We go by what the market is actually doing, and we react accordingly. S&P 500, 1.54% daily ATR over the last 21 days. That's high. We want this down closer to a 1. This means more volatility. This means more chance to get shaken out, more violence intraday, both in stocks and the indexes. As far as sectors go, of the 11 spider sectors, only utilities higher today. So 10 of 11 lower, led to the downside by software, retail, and the 3 tech. XLC, that's communications, XLK, that's tech, and XLY is consumer discretionary. No changes to the portfolio, beta 0.16. All we own is S&P 500, most of that hedged with inverse ETF PSQ, that's the NASDAQ inverse, and the gold and silver we own. No changes to the portfolio, 0.64%. Balance at risk. And the bottom line for today, all major indexes make new correction lows. S&P 500 hit 10% off the highs. 3 of the same keys going into tomorrow. We're monitoring the 200-day moving average and that percent of stocks against the 5-day to see if that can spark at least some sort of a bounce that everybody's been looking for, but we haven't been seeing. Note all of our closes now the last 3 days are these key levels. We've got the 21-day moving average is now below the 150-day moving average. The 50-day moving average is above the 150, but also above the 21. So it broke below there on 3-4. The 200-day moving average ticking up only 2 points a day, same as the 150 now. That's why all our comments now are below these levels. That's it for the tail of the tape. Let's take a look at some stocks in-house that we've been keeping an eye on for potential leadership and see how they did today. OKTA, we've been talking about this since its earnings gap up 2 weeks ago. Holding the 8-day moving average is impressive in this market. A lot of stocks gapping up, getting sold off immediately. This one has not at this point. Here's silver with the breakout. TGTX holding up very nicely above the 8-day moving average. This one's a basketball underwater with the big growth numbers, and the market is holding it back. There's gold also with the breakout. SE, nice earnings move higher, but gave up most of it, bounced at the 50-day, reclaimed the 21-day for 1 day, but now back below the 21-day, but still holding the 50-day. This is also very fundamentally sound, but the market is holding it back. Alibaba took a small position in this in our TurboTection portfolio today, reclaiming the 8-day moving average. Note how it has held the 21-day moving average. China is one of the areas that's been outperforming. Futu, break below the 21-day moving average today. KWeb holding the 21. This is broad China internet showing serious relative strength since mid-January. AbbVie holding up right around the 8-day moving average. BJ's strong move after its earnings, 4 down days in a row now. There's GDX with the breakout. Lemonade holding up on a relative basis, or at least not getting doing worse than the S&P 500, as you can see by the relative strength line, but closing back below the 21 and 50-day moving average. And Zscaler was one we were watching after a decent earnings reaction, but that gave up the 21 and 50-day as well today. Last one, FEZ. This is the Euro Stocks 50. Europe has been outperforming on the back of big stimulus over in Germany, still holding the 21-day moving average. And I'll show one more. Vertex cleared the 500 level, serious relative strength there. All right, one more too. WGS, biotech, also a basketball underwater with these big fundamental numbers, growth numbers, but closed below the 21 today. That's going to wrap it. As always, like to hear from you. The email's Don at revereasset.com. The phone is 855 Real Wealth. That's 855 732 5932. Our flagship portfolio is named GROTECTION. And a reminder, it's designed just to keep you away from these. Participate in the market during uptrends. That's the grow part of GROTECTION, and let you sleep at night when we're in corrections. That's the tection part of GROTECTION. Uh, we just dodge bear markets. It's that simple, and we're confident enough in our approach that we do a video every night displaying exactly what we do in the portfolios and giving our outlook in the market. We've gained a lot of trust in the community, and like I said, now's the time to bring your assets over to Revere. A lot of people also, if you've got a 401k and you're approaching, some are 55, some are 60, some are 62, some are 65. If you're still working, you can roll that out of your pathetic choices that you have in your 401k, unless you've got full brokerage, which most people do not. But you can roll that out into Revere. It's called an in-service rollover. A lot of plans allow it. Check that out if you're interested. And with that, I'll wrap it for Thursday, March 13th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.